please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, on to another top story that we're tracking. In a bid to rein in the rupee and the current account deficit, the government has hiked the custom duties on 19 items that it is deemed as non-essentials. The biggest surprise was the 5% duty on aviation turbine fuel, or ATF, which will hit an already beleaguered aviation industry. Sources in Jet believe the move will have an impact to the tune of $9 million for the airline. In the last financial year, the industry had imported ATF to the tune of $180 million.
Well, that aside, imported air conditioners, refrigerators, washing machines, footwear, they're all set to get expensive. Now, select diamonds and precious metals, shower accessories, kitchenware, trunks, suitcases, they'll all see a hike in terms of their custom duty. Now, sources say that the government may not hike duties on any more goods, at least as of now. The centre is being a little bit cautious due to the current global environment where the United States and China, they are involved in a major trade spat. Here are some reactions to the impact of the import duty hikes, especially on the aviation sector.
The import levels by Indian carriers is insignificant. So any increase in ATF customs duties, primarily to dissuade from airlines from importing from overseas, virtually would have no impact because there is no import or very less import happening. Earlier, the airlines tried to see whether they can import, but the ports our infrastructure at ports is very, very challenging. So, plus there are other issues with respect to import of fuel. So it didn't work.
Well, I've never believed that this will improve your current account balance immediately. I can understand a major commodity of import like gold or a commodity where the prices are rising like oil. But if you begin to impose, pick and choose, if you decide what is essential and non-essential, well, it only means that this government no longer believes in free trade. That's been known for quite some time now. They are essentially protectionist. So these are protectionist measures. It won't immediately improve your current account balance.
Okay, time for a break now. But up next, a panel with the who's who of the mutual fund industry coming up on the other side. Stay tuned.
Well, back home on Dalal Street, traders took a bit of a breather after a big range movement in the last few days. The benchmark indices, they ended with minor losses. The Nifty ended above the 11,050 odd mark after slipping below the 11,000 mark as well intraday. The Sensex ended with a cut of around 100 points. Amongst the broader markets, the Bank Nifty as well as the mid caps, they ended with gains of around 2/5 to around 0.3%. Sonia joins in early this morning. Good morning, Sonia. A lot of queues stacked up for us, both global as well as domestic, and we also have expiry.
Yes, in fact, we have F&O expiry today, so that's going to be an important cue to track, considering that the Nifty has fallen about 620 points in this series. It's been a disappointing series for the bulls. Having said that, even in trade yesterday, you know, the Nifty ended in the red despite the intraday recovery. The key level to watch now continues to be the 200-day moving average of 10,750. At least for now, that could be the immediate support level on the index. Yesterday, FII sold about 800 crores in the cash market. DIIs bought about 1,500 crores or so. But this morning, there are both positive and negative cues. On the negative side, the US Fed has raised interest rates for the third time in 2018. Although it was on expected lines, the Fed has indicated its intent to tighten rates once more in the month of December. The word accommodative has been removed from the, from the Fed stance. So that would be something to watch as well. The dollar index on the back of this went up about 0.2%, now standing at 94.2. The US markets also reversed their gains to close in the red. The Dow was down about 0.5%. Brent continues to be at closer to a 4-year high, trading at around $82.2 a barrel. So you could expect the market volatility to continue in the equity markets. However, the sentiment in the money markets could improve today after the announcement that came in yesterday from the government, where the first steps have been announced from the government to support capital inflows. Import duties have been increased on 19 items with immediate effect to contain the import of certain non-essential goods. So that could improve the sentiment on the rupee. but expect volatility to continue in the equity markets.
Okay, and stocks, Sonia?
Well, as I said, on the back of that hike in import duty, there are a couple of stocks that will be impacted. Now, the customs duty on ATF or aviation turbine fuel has been hiked. ATF imports have been hiked from 0 to 5%. Now, this is a sentiment negative for a lot of the aviation stocks. The companies don't import ATF, so directly it may not impact them, but indirectly it will, because ATF prices could go up by immediately by about 5% as the pricing mechanism of oil companies is based on import parity pricing. So you could see, on the back of, first of all, on the back of rupee depreciation and higher crude prices, it's been a struggle for them. And now, because of this, ATF import hike, the prices in the domestic market could go up by 5%. So keep an eye out on that. It's a positive for Titan this morning because there's no change in the import duty on gold, and that was one fear in the market because of which the Titan stock had fallen. But now the overhang is out of the way, so Titan could move up. Also, the basic customs duty on manufactured jewelry pieces has been raised from 15 to 20%. That's positive for Titan as well, as it reduces the competitiveness of imported jewelry. Import duty on radial car tires has been increased from 10 to 15%. That's a sentiment positive for the tire stocks. It's just a sentiment positive because the imports are less than 10% of the passenger vehicle car market. So, at best you might see a knee-jerk reaction on the upside. A couple of stocks deserve mention on the back of news flow. Torrent Power has won a wind power project under the e-reverse auction for setting up a 115 megawatt project, and NBCC has received a nod from Air India to monetize a land parcel at Connaught Place, so that could be in focus as well.
Okay, all right, Sonia, thanks very much for that. So those are all the cues for today, but it is also expiry. So Nigel, how do cues stack up there?
Well, Ekta, at the end of the August series, we were talking about, the bulls singing "Nothing else matters" because macros are deteriorating. But in fact, the markets gave you a rally of close to around 500 points. Now, if for the September series, it appears they're singing "Just wake me up when September ends," because that's precisely how it played out. Just take a look at that. The Sensex was down more than 2,000 points. In rupee terms, it was down 5.5%. And in dollar terms, it was down nearly around 8% approximately. And if you pull up all the series in this year itself, well, the September series is a little better than only the February series, because in the February series, we're down 690 points. This time around, we're down close to around 620 points. At the start of the series itself, we had highlighted that the FIs, they were the most bullish. The total open interest was the heaviest that we have seen. So, we have seen time and again when in fact the bulls are overtly very, very aggressive. That's when in fact the markets get into a bit of trouble. What went wrong? You had the rupee that was weakening. Crude oil prices went up as well. You had, Rana Kapoor not getting an extension from the Reserve Bank of India. PSU banking merger, that soured sentiment a tad bit. And finally, the IL&FS group downgrade, and that's what triggered liquidity fear. So let's translate all of that into stocks. Your Jet Airways, that was on more than 30%. Crude prices moving up, rupee weakening. Yes Bank on the back of no extension to Rana Kapoor, that in fact was down nearly around 40%. And Bank of Baroda, that got hit because you're merging weaker banks with it. So on the back of that, we did see selling. And finally, liquidity fears in the debt market. That's what led to some of these NBFCs taking a sharp knock. Which were the sectors that got knocked back? PSU banking stocks were down more than 15%. You had the breadth of the market that was pretty bad, down more than 10%. And the auto space, auto index on the whole, was down close to around 10%. Maruti Suzuki in this series breached a 52-week low, so that was down nearly around 15%. And Tata Motors as well, down close to around 10%, telling you why the auto index was down close to around 10%. In terms of gainers, though, the rupee was depreciating, so some of those export-oriented companies, they did well. IT and pharma in there with some gains. But banks and financials, they got hit very, very hard in the past series. Indian Bank down nearly around 30%. You had IDFC Bank as well that was under some pressure, losing more than 20% of its market capitalization. And from the broader markets, plenty of losers. Highly leveraged stocks, they got hit. You got Reliance Communication as well as JP Associates, both of them down more than 30%. And finally, if the rupee is going to be depreciating, then you'll have a couple of winners, particularly from the pharma space. So Biocon and Auto Pharma in there with gains of 10 to around 15%. And a couple of those metal stocks as well. If you're going to be importing metal, it's going to be a little more expensive because the rupee has seen some kind of depreciation. So in all, September series, not a great one for the bulls. But on that note, I'll tell you what, we'll slip into a short break. Up next, the government hikes import duty on 19 items to rein in the rupee as well as current account deficit. More on that on the other side.